Hi, it's Paul Roberts here from Property Apprentice, one of the owners, and I just thought I'd give you a bit of an update on things that we're seeing in the market and also some of the things that I'm being asked by clients and potential clients at the moment. First of all, we've had a lot of interest over the lockdown and people starting to see the ability that there's going to be some good opportunities for the remainder of this year, which I do believe there are for the property market. Obviously, unfortunately, there will be some people that won't fare too well. There's quite a few larger companies that are laying off people and smaller companies. And I think that there is a bit of a difference this time around than, say, the global financial crisis, with the fact that we've come into this downturn, recession, pandemic that we have with a different market. We don't have 11% interest rates like we did when we went into the financial crisis. We had a 3.5% interest rate, and that has since gone down. And even to this week, we've seen two of the banks that had beat the rest of the banks at the beginning, Kiwi Bank at 2.99, and then we had TSB at 2.89, and now we've got ANZ at 2.79. So you can actually start to see the competition for the banks. They're wanting to buy your dollar, of course, and this is obviously one of the things the Reserve Bank is wanting to do, is to stimulate the economy and the government, of course, to actually get us out of this as quick as possible. So I do think that there's some opportunities to come, but I also think with the things that we've had this downturn versus previous ones, we've never had mortgage holidays before offered to us. Better to go interest only than mortgage holiday if you can. And also things like the wage subsidy that has been coming out as well. So there's been a lot there to buffer it, because you've got to remember it is nobody's fault. This has come around due to a pandemic, and it is not a business's fault or a person's fault. So governments, banks are trying to help as much as they can. If we went back to the financial crisis when we were at 11%, 10.4% interest rates, if you didn't pay, you got taken to the cleaners. So it is a completely different market. So hopefully it will take a little while. I think as we start to come out of this and going into the next week, there will be a lot of people that will be licking their wounds and looking for new work, unfortunately. But we hope to keep that as small as possible and start to stimulate the economy and start moving forward. So there's been some good interest from the banks, and it seems as though some of the banks now, with the loan to value ratios, are looking at that. They're reviewing them for investors right now. Some of the banks have already said that they are going to do 90% lending for first home buyers, which is really positive. So there is the funds there to do that. And I think that we need to keep that positive spin on it moving forward. Some other things, the Reserve Bank reduced the OCR to 0.25. They don't want to take it to negative, as we can understand, but they are willing to do that if necessary. But I don't think that will be a quick move or a move they would want to do. There's other things that they can potentially do than that. And one of the things, not long ago, we had the first open homes in level 2, and we had 50 odd people running to the open home and queuing up down the road. So there's going to be a little bit of that market urgency to go, well, I need to get in. And I've had 6-7 weeks where I haven't been out of the house. I want to do that buying experience again and start looking for property. That will calm down, I believe. I think people will get back into a little routine, and I think this will take a little time. But the opportunities that we have this year, knowing we've also got the election coming up, which 100% looks as though it's going ahead, that always flattens the market every 3 years. So if you think about opportunities that we've got now, as people start coming back into the workforce and into the offices, and then the opportunity that we'll have around election time, which kills the market all the time, every 3 years, we're actually going to see a couple of hits here where people will be able to do some good buying realistically, just when people sit at home and go, oh, we'll just see what happens. I'm a little bit fearful around if this happens or that happens, or if they do this or if they do that, whoever the party may be or what makeup of that party would be. Now, I think a lot of people do that, and they've done it since day one. They sit back and wait and watch. Reality is that after the election, it doesn't take long for you to forget. It's like Christmas. You get through the Christmas holiday, you go back to work, and a week later you go, did I have a holiday? Oh, yes, I did. And it's that whole thinking about the next process and thinking about, look, do I need to be stuck to the TV? Yes, you're going to vote. Yes, you're going to make the decision for yourself, but you also aren't the person that can control that destiny. You've actually got to go, what do I need to do? And I think a lot of people that I meet with that are either clients or people that are looking to become clients don't have a plan. And that's one big thing that we must have. As property educators, we don't sell property to our clients. We have never done that in 10 years, and we will not do that. Simply because we want to be impartial and have your best interest as a client at heart. Because there's no point in saying, hey, look, yes, you can buy an investment property. Oh, I just happen to have one in the office here. Would you like to buy this one? It fits your criteria. That gets you nowhere. You may as well open your wallet and close your eyes and let somebody do it for you. And that's, unfortunately, some people I see down the track that have bought something that didn't quite work for their situation. Unfortunately, that's not a surprise. If you're going to trust people like that, then usually that comes back and bites you. So what you need to understand is the business that you're getting into. You wouldn't spend 2, 3, 4, 500,000 or more on a business franchise, let's say, without having an accountant go through the profit and loss and see what your client database is like and see what your revenue and your ongoing customer base is like, how many people come in the door every day. You wouldn't just go, oh, here's 500 grand, thanks very much, I'm sure it'll be fine. You'd actually pull it apart. But people don't apply the same knowledge, due diligence with buying a property, because in reality people go, oh, the bank said I could have that money, so off I go shopping. That's not the point. You actually need to step back, understand, educate yourself, and then have a strategy to move forward with impartial people, not someone who's selling you a property, because that only gets you so far, and usually you get to a point and that's it. Okay, so another thing that I think is really interesting is you've got to look at this pandemic, the crisis that we're in, as a change. Look how many people have gone through the whole working from home. I've actually loved it. It's been great. I've spent so much time with our daughter. It's been a really fun time, you know, not fun time we couldn't go out, but you know what I mean. It's been nice to be around family and have that time. I want you to really think of this not as a crisis, but more of a transformation of what it is the next thing that we're going to do. Everybody's had to do a reset. Everybody's had to think a little bit differently, but I think it's good for us. And I think people will start to work differently from this point forward. And that's what I want people to do around property, is think different. Don't just hand over. Don't just go, oh, here's some money, you go buy the property for me. That doesn't work. You've got to start thinking about you and nobody else, okay? Because I find this with a lot of people I meet. Lots of people can overestimate what they can achieve in a year, but they can underestimate, say, 5 years, you know, and that's a great time in the market. So keep thinking that way and really think about the position you're in and the opportunities there are for this year. And some people have said, what if the property market crashes? I just don't see that happening. Yes, there will be spots in New Zealand that will have declines in values, but they will come back, and people are not going to sell $100,000 less or 20% less, let's say, when they've got a 2.79 interest rate. They will just ride it out. You know, there will be people that maybe have secondary properties that go, okay, we need to cash that one out because we've lost our job, etc. But you've got the ability of using the opportunities with the banks, with the interest only, let's say, and if you have to, a mortgage holiday, but then, you know, or reducing debt in other ways if you're looking for work. But I think that there's also some great talent out there as well. So I think a lot of employers will be looking to employ as well. So as we start to get back into the swing of things and looking at things like migration, has that stopped now? That was another question that I had. And it was like, that stopped, so that means the shortage will go. Well, no, it won't, because a lot of people came home prior to the crisis or during, and I just don't think that people are going to leave. Where are they going to go? And with some of the building companies having less and less funds, because property developers' funds are going to tighten up moving forward from here, you're also going to see a lot of companies that are going to have to reinvent themselves, as I said, and they're not going to be able to build as much as they used to. So that in turn is going to create its own shortage. And the labor that we've lost, a lot of people have had to go home. So there's a lot of things to consider there, but what I'm just trying to get across is it's really important to be considering the opportunities that you've got this year. Potential LVR drops, lowest interest rates you've ever seen, opportunities in the market. And as we come out of this, let's say something like that happens in 3 months' time and you get a 20% deposit for investment property. Are you going to be at the back of the queue or are you going to be at the front of the queue? And you only want to be in that queue when you understand the business that you should be running for yourself and the understanding that property business. So on that, if you do want to get in touch or want to come to one of our free events or one of our online events that we're running right now, go to propertyapprentice.co.nz or email us at info@propertyapprentice, and we'll tell you when the next events are on, and we'll look forward to seeing you then. Take care.